Okay, so that was everything that transpired in the market, everything that stood out especially. If you take a look at what the market momentum was over the course of the day, quite volatile, because at one part of the trading day, you had the Nifty that slipped below the 23,000 mark for the first time since April of last year. And who'd believe that on the same day, a few hours later, we've managed to close above 23,400. So quite the jump coming in of about 400 to 450 points from the day's low. A 1.1% uptick on the Nifty on close. That's the Nifty spot. Sensex to 1.25% uptick. It was the India VIX that saw a further cool off of 4.5% to close around that 21.6 mark. Nifty Bank too did its bit, and a 1.25% uptick on the Nifty Bank too. What really stood out is the broader end of the market, because no matter what the benchmarks are doing, the broader end saw some weakness, and that weakness was persistent throughout the course of the day. Yes, some recovery from the day's low, but nonetheless, it's a close in the red for the Nifty index, about 0.2% lower, and a 0.5% cut coming in for the Nifty small cap names. But what were some of the big market drivers today? UltraTech Cement, 4.5% uptick there. M&M, Grasim, Trent, Eternal. What really stands out is HDFC Bank, about a 3% uptick on that one, that led to this overall sharp spike in the market that we've seen, and the recovery from the day's low. Bajaj Finance, JSW Steel, ITC, all of them did well. On the flip side, cuts were led by BEL, Max Health, Coal India, ONGC, Wipro. These were some of the Nifty 50 winners and losers. From the broader end of the market, towards the last fag and a few minutes of the trade, you had Nifty 500 that managed to end the day in the green. So good move coming in over there. In terms of percentage movers, you had the big outperformers in the names of an ITI, 18.5% uptick, MRPL, 15.7% higher. Joining that was its peer Chennai Petroleum, because crude has once again topped that $100 per barrel mark. So refiners were having a field day today. Tejas Networks on the back of an Asia contract that they've bagged. Ola Electric, a very sharp spike in the last few minutes of trade, 5.5% higher on the back of the news that they're mulling a 2,000 crore rupee fundraise. Adani Power, Persistent Systems, Aadhar Housing Finance, all of them did well. On the flip side, it was IDBI Bank, Bandhan Bank, two of the biggest losers on the street, a 17% cut and a 7.5% cut respectively. Harsh, really stands out the way we've seen clarifications coming in galore today. IDBI, Bandhan, you've had Fino Payments Bank. The private banking space was in a little bit of a slump today.
Yeah, the smaller ones.
Smaller ones.
And PSUs, of course, IDBI as a result of that. But RBL was also in focus as a result of that IDBI transaction. There was a CSB Bank as well, because Fairfax was the other interested party within the IDBI fold, and therefore you saw some moves within that particular announcement. But let me switch across. We spoke with Venugopal Garre of Bernstein. He's the managing director there, and amid the West Asia tensions, markets of course have been volatile, but commodities are sliding down as well. Crude has seen a sharp spike. So in this situation, what sectors should one look for? Listening to what Venugopal had to say.
There is an economic impact for sure, right? And if I were to just put aside those which are directly impacted. See, directly impacted are those if you're actually working in Middle East and doing some physical activity out there. That's direct impact. Or travel, as we know, you can't really fly over that area. But indirect impacts, it's a difficult thing to measure. So, for example, let's take the case of financial sector. Financial sector has seen a deep cut year to date, and it surprises me, because if I look at the broader macro context, I don't think we are talking about such a deep GDP cut, or a deep credit growth decline, or an NPA risk rising within the context of Indian lending, right? So these are the sectors where you would still perhaps look for rebounds, look for safety, rather than just playing pure safety through, let's say, utilities, which is playing out right now. So I would be in that camp of trying to identify those sectors, and there are quite a few of them. Telecom is another. Why should you have a 17% decline in some of these stocks that we have seen, right?